Greetings. I've been recording a short series of videos answering questions sent to us by our investors. These questions are diverse and cover all kinds of topics, and where I think the questions are of particular relevance to the database, I've been recording a short video just to put those questions out there. The question that I have received just a short while ago, and which I think is quite interesting, is the following. How will Zagga allocate loans between direct investors, i.e. those who only invest via the platform, and those investors who participate in the Zagga Feeder Fund? Say a very good loan opportunity arises. Is it treated on a first come, first served basis, or will it be evenly distributed between the platform and the feeder fund? That really is a good question. For those of you who don't really know how the feeder fund works, we have the opportunity for those investors who wish to take it, for you to invest via our fractional lending trust number 2, the Zagga Feeder Fund, which does its best to seed all of the loans before they get out onto the platform or simultaneously with getting out on the platform. Investors in the feeder fund must put in a minimum of $250,000. They get a distribution paid to them every 6 months, and their funds are locked up for a minimum of 12 months. The advantage that they have is that they go into all the loans, and the feeder fund cannot be invested in 100% of a loan for more than 90 days. And they therefore don't have the risk of disappointment if they can't get into loans that are on the platform. On the other hand, if you're a platform investor, direct investor, you pick and choose the loans you want to go into for the amount that you want to go into, and you can really structure your portfolio accordingly. Of course, the downside is there's a lot of demand for the loans and you can't always get in. So for many of our investors, they share their money between an investment in the feeder fund and going directly into the loans. Okay, so then to answer the question again is how Zagga allocates the loans between the two. This is the answer I gave that investor. Firstly, we do not differentiate between the feeder fund and the platform, and we do not differentiate on the loans. Every loan goes to both. But we use the feeder fund to get the loan initiated and then offer it onto the platform. In most cases, the fund will still retain a percentage of the loan. And in order to ensure that the fund cannot own all of the loan for all of the time, and that there is quality control between the fund and the platform, the fund cannot hold more than 100% of the loan for 90 days. This means that the fund must invest in loans that it has a very strong certainty will be attractive to the platform as well. The Zagga Feeder Fund is really a mechanism to take advantage of loan opportunities quickly and to avoid having investors' money lie fallow awaiting a loan commencement. As sometimes loans don't always start on the day that you want them to, and we don't want to take investors' money without getting it invested quickly. Currently, we have almost insatiable demand on the platform. And every now and again, for smaller loans, the feeder fund will stand aside and let the platform take the loan directly. However, please note, there is no difference in return between a fund invested in directly and a loan invested in via the Zagga Feeder Fund. The loan is identical, the return is identical. For those of you who get it, you should really have a look at the loan portfolio update that we put out. And for those of you who are interested, every second month we put out a Zagga Feeder Fund update. And if you're interested in investing in the feeder fund, please ask us for a copy of that update as well. And you'll be able to see then the relationship between direct loans across the platform and the way that the feeder fund invests. Those investors in the fund are generally those who no longer wish to go loan by loan, and there could be many, many reasons for that. And there are those investors, as I said earlier, who invest both via the fund and directly. They like the idea of earning a fixed tangible return via the fund and then using the one-to-one direct investments to create some alpha or some higher return on those investment funds that they still have available. The other advantage of the fund, of course, is that your money earns a return from the day it is invested until the day it comes out with no uninvested periods. We have more than 300 investors now across our platform, ranging from global investment banks to property funds, to family offices, to overseas families via their trust companies, to self-managed super funds and high net worth individuals. We have been subject to DDs by some of the top law firms in Australia on behalf of their clients who are our investors. We simply would not enjoy this support as a business that only started 3 years ago unless we had exceptional IP, people, systems, and processes. And unless the IP, systems, people, and processes were trusted to do the right thing by our investors. We will always do the right thing by our investors. You are welcome to choose where you wish to invest, whether it be directly or via the feeder fund or both. But rest assured, whichever way you go, the loan will be the same. I hope this has answered the question. I hope you found it interesting. If you want any more information, please email info@zagga.com.au. If you have an interesting question, one that you think may be relevant to the entire database, please email us. And if so, we'll record a short video giving the answer. Until then, keep safe, stay well, take care. Thank you.